Australian Bureau of Statistics lending figures show that investors are surging back into the markets. Interestingly, overall lending has increased over the last 2 months as buyers are ignoring the debate whether interest rates are going up or going down. They're just getting into the market. Well, not all buyers. First home buyers are having trouble. And today we discuss this in this week's Property Insider chat with Dr. Andrew Wilson, as well as the latest rental reports showing that there's no relief in sight for tenants. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Australia is a nation obsessed with house prices, and I remember reading the results of a recent survey by Westpac Bank suggesting 60% of Aussies are planning to buy a property in the next 5 years. Well, last week we reported the My Housing Market's end-of-month figures showing that property prices have continued rising around Australia. That's 17 months in a row now, meaning that many first home buyers are facing a heartbreaking battle. And it's doubly hard because rents are skyrocketing. And in today's Property Insider chat with Dr. Andrew Wilson, we're going to discuss the latest My Housing Market rental report. Interestingly, while first home buyers are having difficulty getting in the market, the latest finance figures suggest property investors are back in force. So I look forward to breaking down the latest property news with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. Hi, Andrew.
Yeah, good day, Michael. Yes, we're well and truly into the winter period now. I guess when we've had our first winter public holiday of the year, which of course is the King's birthday. I must remember to call it that weekend. Everywhere except Queensland, which has theirs in October, I think. But and yes, another rent report, another same old story in a sense that no relief going forward. I think the one thing that we have is that in some of the capitals, the difference between rents now and a year ago isn't as great, and that's because the big shifts have already occurred, but rents are still rising. And of course, we really couldn't. It would have really been a disaster if we had have continued to have those double figure 20% type rises year in, year out. But because can't do that because people just can't afford it. But certainly it was a very sobering month for tenants looking for vacant properties. Not surprisingly, we saw vacancy rates falling across the board. So let's have a look at the data.
Well, Andrew, it's nothing surprising here because each week when we talk about these things, we mention how this has been coming for a long time. It's now hit the news, and being an election year, both sides of politics are interested in this all of a sudden. But it hasn't come on suddenly, and it's not going to go away quickly either, is it?
No, well, once you sort of get behind the eight ball of not having enough properties, I mean, properties aren't something you just add water to and all of a sudden you have tens of thousands of them. The supply lines are very problematic, and high building costs, which are getting better now, but still high, just add to the problem, and we have so many constraints to new building that once we do get to this sort of ground zero level of underbuilding, there's not much we can do. In fact, there's really nothing we can do. And unfortunately, what we'll see is social change as a result of this. Preferences for housing will change because people have to live somewhere. And let's hope we don't get to the extremes we've seen in other jurisdictions, such as the US, where people live on the streets. Although I've been informed that we're starting to see some of those on the street dwellings starting to emerge on the Gold Coast.
Yes, and that's terrible. That shouldn't be happening in a lovely country, in the best country in the world. So we're not going to solve the problem, but maybe you should go into and explain what's happening to houses and then what's happening to the apartment market in rentals, Andrew.
Well, as I said, Michael, we had a tightening of the rental markets over May. Not a real surprise because April is a holiday month. We do see less demand, of course. It's also the part of the semester period for the universities, so we see less student demand for units in that sense, particularly. But yeah, so following the what was a bit of an upward trend, not surprisingly, a seasonal trend over April, we've gone back the other way quite sharply in May. And in fact, vacancy rates fell in every capital city for both houses and units over May. And you considering they're already at extraordinarily low levels, that's sort of bad news because there's just fewer vacant properties, basically, Michael.
Yes.
And houses, the Sydney house rental market has been marching ahead over recent months. It was up again by 2.3% over the month. Now, $819 is the median asking rent for a house in Sydney, Michael. $819 the median, and that's a 9.2% increase over the past year. Melbourne's rental market has certainly started to shift up a gear, up by 0.4% to 603 now, the median. Still well behind Sydney, but nonetheless on the rise, up by 9.5% over the year. Brisbane, a bit of a surprise. It's been very strong lately, up by, it was actually flat over the month at 640, and reflecting what was a big rise a year ago as that migration surge really did take hold of the Brisbane market. Down by 1.5% compared to the median of a year ago, but that just does reflect what a strong market it was 12 months ago. And the vacancy rate in Brisbane is just 0.6%. In fact, vacancy rates are very similar through all of the capital city, Michaels, with Darwin the lowest at 0.3, and Hobart the highest at 0.8 for houses. So most are 0.6 or 0.4%, which is just ridiculously low in terms of the numbers of properties available for rent. And over the past year, Perth's been the big mover in house rents, up by 12.6%, Adelaide up by 10%, Melbourne up 9.5%, and as I mentioned before, Sydney up, I think I did 9.2%. So no good news there, really, if you're looking to rent a house. In fact, we seem to be seeing more energy again shifting towards house rentals away from unit rentals. And I think that shift between one dwelling type and another is fairly typical as those affordability barriers move from one dwelling type to another, and we see demand then shift to the relatively more affordable, and then it shifts back to the other dwelling type. So vacancy rates down across the board for houses, and Sydney again very, very strong over May for house rents. So similar to the house rent report, Michael, unit vacancy rates fell across the board. Vacancy rates are still a little higher for units compared to houses, where we have a couple of the capital cities have vacancy rates just above 1%, with the exception of Canberra, where vacancy rates are 1.6%. We must point out that's still very low. So typically a balanced market is around about 2%, balance between tenants and landlords, and a negative rental, or sorry, a neutral rental outcome. But again, those vacancy rates were all lower over the month. Sydney rents, similar to houses for units, were up by 2%. Sydney median house rent now at $765. Melbourne just shifted backwards a bit, down by 5.6%. Its median unit rent now at $550. Brisbane up 0.6%, and Adelaide up 1%, Perth up 4%. When we look over the past year, Brisbane's been a very strong market for units, up 15.7%. Adelaide also up 15.7%. And look, Perth also had a double figure increase over the year. But those, the Adelaide and Perth unit markets are quite small, but certainly Brisbane isn't. And it's a significant unit market, and again is thundering along in terms of rental increases, as I mentioned, up by 15.7% over the year, and the vacancy rate of just 0.9%. I think that Melbourne result is a little bit volatile, and I wouldn't be surprised to see that loss picked up again over the next month. But look, no good news there, Michael, for tenants, really. It becomes a little difficult, I guess, to come up with a different narrative.
No, it's the same every month. Let's put some context to this. About 31% of Australian households rent, and they don't always rent because they're poor. In fact, a lot of people rent because of the stage of their lifestyle they're at, young people leaving home, people getting divorced, people getting married and starting their homes, not being ready yet to buy a home. So there's always people moving in and out of rental accommodation. And so therefore it's suggested that a vacancy rate of around 2% is a balanced market where there's sufficient supply of rental accommodation to satisfy tenants' needs. There's not long queues, and on the other hand, there's not too much accommodation that rentals start to have to be dropped a bit to get tenants in. But this is far from the situation at present, Andrew. Every just looking at the charts you've shown, everywhere is got vacancy rates almost everywhere less than 1%, and that's what's creating those long queues one sees in the news, and the opportunity to landlords to select amongst the tenants. Interestingly, this week there's been some new tenancy legislation brought in Queensland to protect tenants, to stop rental bidding. It's been introduced from one state to another. And I can understand why there has been a bit of an outcry as tenants are finding it hard. But it's not the rental property providers, the mums and dads' fault that there isn't the accommodation, is there? Is it?
Well, it's not. It's just a systemic problem. There's nothing we can do about it. It's
Yeah.
and notions of rent freezes or rent controls have failed over and over again. I thought it was interesting, Michael. We had the European Union have its elections, currently having its elections on the weekend. And the big losers were those that have been promoting as a political policy rent freezes, and that's the Greens. Votes for the Greens have absolutely collapsed in Europe. And, they have been at the forefront of these fantasy notions of rent freezes. And, tenants have learned their lessons from the rent freezes actually are worse for them in terms of a policy position. And I think that's, once you start interfering with the price structure of a free market, such as what our rental market is, it only postpones the inevitable when it's the fundamental law of economics of supply and demand. When you don't have enough supply to match demand, prices will rise. So okay, we don't want to have auctions for rental properties, but all it means is that the market will be shifted to a high, I guess you have in the sales market, what we have in a private sale environment is you just put your rent up as high as you can, and take it from there. But it just means that you can't shift the absolute value of rental properties if there's so much demand. Rents will continue to rise. We're seeing that now, and there's really nothing governments can do about it other than what the federal government's done is improve the marginalised by improving welfare payments. But as we saw in the budget, the average rent assistance rent is around $300 a week, Michael. That's what an average welfare recipient pays for their rent that are on rent assistance. And we've seen those figures for rents in the capital cities, and just looking at Sydney, which is now over $800 a week rent, it shows what the private market really, the value of rents in the private market is well above those of the marginalised. And, there's really no solutions other than to build hundreds and hundreds of thousands of new homes. And that's just not going to happen, Michael.
The latest lending figures came out from the Australian Bureau of Statistics recently, Andrew, and it showed that lending rose for the second consecutive months, with buyers ignoring the debate whether interest rates are going to be cut or go up over the next little while. They're just getting ahead with it. But in particular, investors are back in the market, Andrew.
Yes, we sort of questioned the lending data from the ABS because it was a little bit soft earlier in the year. And yet we've had rising markets. So it sort of didn't add up. It's usually a measure of consistency with house price growth and auction clearance rates. But certainly that's changed around now. The ABS has had some problems with their methodologies. They've admitted that. Perhaps they've tidied that up now. But we've had 2 extraordinarily strong months of loan lending activity for homes, up by 4.7%, which is a very big rise, Michael, over the month. And of course, this is seasonally adjusted. And that followed an over 3% rise over March. So March and April have been very strong months for home lending. And as you said, what's interesting is that investors are really leading the charge back in terms of this data. Investor numbers were up very strongly over the month. Total owner occupiers were up, but no surprise that first home buyer numbers have fallen again. First home buyers, logically are finding it difficult to get into the market. Higher prices, home prices are up, more than 10% in a number of capitals over the past year. High rents, we know that. And of course, generally higher prices anyway with higher inflation certainly making it tough for first home buyers to find their deposits. So we're seeing that in the data. And when we break that down, we can see that first home buyers were down by 6.6% over the month. Michael, investors were up 4.4%. Over this year so far, investors' numbers are actually, well, value investor lending is up by 26.1%. First home buyers down by 3.5%. That's compared to the same first 4 months of last year. And over the full year, we're now starting to see a rise in investor activity. So the year ending April this year is now investor lending value is up 2.7% compared to the previous year. So some very positive data there for investors. Probably no surprise given high rents, high prices. It's a reasonably fertile ground for investors in a high interest rate environment that are looking for some value in their investments. And we shouldn't be surprised that investor lending is surging at the moment. Another model that I guess reinforces, another home loan model, Michael, that reinforces our undersupply of property, and that's really going nowhere, is when we compare lending for established homes versus lending for new or newly constructed or to be constructed homes. And we've seen that falling away considerably, the relationship between the two. And even though we saw a slight uptick over April, we're still 20%, or the proportion of home lending for new homes is 20% of that of established homes, which is a very low, near record low proportion. So what it's telling us, Michael, is that there's a declining lending in terms of the whole market for lending for loans for new homes. And again, that just reflects our undersupply environment and exacerbating the tough market for rentals.
Well, there's clearly going to be economic and financial challenges and geopolitical problems around the world. But what all this is showing is that there's no end in sight to the shortage of properties in Australia, which is just going to underpin property values and rental values as we move forward. I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. And we try and keep a track of how it's going on the ground each week, looking at the auction results. It was a slightly different auction weekend, Andrew, because large part of Australia was on holidays, and vendors don't particularly want to test the market when there are lots of people with other distractions. But overall, the auction markets did pretty well.
Yes, they did, Michael. It was the King, I nearly said it, the King's birthday weekend, long weekend holiday, everywhere except Queensland. There were some good results, really, everywhere except Melbourne. And Melbourne, it can tend to have more of an impact on what's happening in the auction markets on long weekends. And that's because the proportion of property types is certainly skewed towards lower end properties in Melbourne. But Sydney, 72.9% clearance rate, reasonably steady in the low 70s, that Sydney rate. 470 auctions, which of course was well below the weekend before. But when we again compare it to the same weekend last year, Michael, a very strong result for numbers. The same holiday weekend last year, Sydney numbers were well ahead of that. But the auction clearance rate was lower, but not really that much lower compared to the weekend last year. So the Sydney market is still turning over quite reasonably for most sellers. Melbourne, again, numbers much lower than the weekend before. Clearance rate was down in Melbourne, 58.1%, lowest for some time. again, holiday impacted. And as I said, it's about the lower proportion of higher priced properties in the market on the holiday weekend. Again, the clearance rate in Melbourne well below where it was a year ago over the same holiday weekend, but the numbers were significantly higher, Michael. Brisbane ran about the same as the weekend before. It was a non-holiday weekend. Clearance rates holding there in Brisbane. Again, similar story to our rental, when we looked at the rental report, that Brisbane was really at the peak of its migration surge a year ago, and it had extraordinary clearance rates for Brisbane a year ago, 73.8%, and auction numbers again higher. Adelaide a little bit lower, holiday weekend, half the auctions that were conducted the weekend before, but clearance rates were actually higher in Adelaide compared to the holiday last year. And Canberra had its biggest auction clearance rate for some time, Michael, at 74.9%. But I would advise a grain of salt with that one, because there were low numbers of auctions. But look, we've been heralding perhaps some better signs about the Canberra market, which has sort of moved sideways and a little bit down over the second half of last year and into this year. So maybe again, some more positive signs there for that Canberra market. But we will have to await results over coming weekends to see if that can be consolidated. We can see that Sydney market holding up when we look at the monthly results over the past year, and the Melbourne market certainly down on where it was a year ago, but holding at least so far over June compared to May. And again, as we mentioned about Brisbane, it's well below where it was a year ago. But for Brisbane, these results are very consistent and what we would expect for a rising Brisbane market, with auction clearance rates over 50%. Adelaide holding, again, consistently the strongest clearance rates in the market, but again lower than a year ago. And a big result in Canberra, as we said, the biggest for some time, and its clearance rates tracking at its highest level for a while, but as a result of that big result on the holiday weekend, you can get those headline auction clearance rate results on the Doc Andrew Wilson LinkedIn site, 6:30 p.m. on Saturdays, and Michael, of course, publishes the full national auction results on Sundays, which includes the regional breakdowns for Melbourne and Sydney, and the top 10 sales under the hammer for each of the capitals.
I always find that really interesting, Andrew. You give us the reports, we publish them, and it's interesting to see where the top results are and what parts of each capital city achieve those results. The other thing I find very interesting is the chart we're showing now, which shows how auction sales have been much higher over the last year. So one of the things we're looking at, of course, is auction clearance rates, but more importantly, the trends, but also the trend in how many properties are selling, which shows us a depth of the market.
Yeah, and I mean, at the end of the day, the number of sales is, the number of people who are physically buying properties. Clearance rates give us a proportion of the sales to listings, but when we've had an environment such as we've had this year so far, where we've seen a surge in listings, and clearance rates, particularly recently, haven't been as high, it really, when we translate that into sales, properties, selling under the hammer, Michael, it gives a very strong picture, and the number of sales in Sydney is up nearly 30%, up over 20% in Melbourne. This is for the period to June so far, compared to the same period last year. Brisbane up 13%, Adelaide up 12%, and Canberra, which we've mentioned has been an underperformer, down by 3.3%. So, that really puts into context how strong the market has been this year, and how many more homes are actually selling, Michael, compared to a year ago. And I think this is obviously the cycle as it moves. The beginning of the cycle, the recovery phase, is usually about buyers coming into the market because they perceive those value opportunities. Of course, sellers at the beginning of the cycle tend to be a little bit more hesitant. They've got more skin in the game. But as the cycle matures, you then see more, as prices rise, you then see more sellers coming into the market. And that's what we've seen this year, is sellers taking advantage of higher prices, those that were particularly sitting back a year ago. And, there's some very strong results there that I think, help to support the market insights in terms of clearance rates,
Well, another interesting week in property. I look forward to catching up with you again early next week and discussing all that's happening in the news about property and our economy. Thanks for your time, Andrew.
Thanks, Michael.